Hi, it's Roger here, and in this video, I'm going to show you exactly what the top investors in the world are doing with their money today and what they're telling you to do with your money. And by the way, that $50,000 is not a theoretical number. Next week, I'm going to be giving out $50,000 in prizes. And it's going to some of you who are watching this right now in our Investor 5.0 challenge. So if you've been watching my channel and you're now ready for a live experience, this is the first time that we're actually going to be doing this. From Monday the 29th of March through to Good Friday the 2nd of April, I'm going to be live streaming for an hour each day on YouTube and on Facebook with 20,000 small investors already signed up to join us. So for all the details, just click on the link below and then sign up to join us. We're going to cover growth stocks, meme stocks, crypto, NFTs, currencies, commodities, and property, both in your country and globally. And don't worry if you don't know what a portfolio plan looks like, because we're going to be giving everyone a template that they can follow. And it doesn't matter whether you got $10 or $10 million to invest. Now is the time to get a plan. And the best plans are going to be the ones that are aligned to your passions, your purpose, and the profits that you want to make. And why are we doing this right now? Because all the rules have changed. Here's what the top investors are saying about what's actually going on right now.
Well, let's talk about one factor as an investor you have to consider. We've never taken $1.9 trillion, put it in a helicopter, and just flown all over the land, sprinkling it out. That's basically what we're doing. You know, half of this money is going into Bitcoin and the stock market. That was not the intention. It was supposed to feed people and let them pay their rent. That's how extreme we've gotten. At the same time, regarding volatility on growth, which I still say you have to stay the course on because it's empowering the new digital America 2.0. Every time I get into a discussion about the volatility of software or firmware or chips or anything, I say, go look at the chart of Amazon over the last 17 years. Look at it, deal with it, and realize up to 38% corrections all the way through. So when tech has a massive correction or software sector gets soft, if you don't believe growth is still there, then of course you sell into it. But I don't think the story's over. We're not even in the third inning. So I continue to buy. That is my number one choice.
We're seeing a flood of IPOs, a flood of secondaries. We've seen SPACs, which really are liquidity events earlier than might otherwise have taken place, because I think there's a collective understanding that the future is here, and if we don't invest now, we're going to lose out. We've never seen this amount of change at the same time in history. I know I've said to you before, go back 100 years and we saw transformational technologies: telephone, electricity, automobile. So 3 of them at the same time. All of them experienced exponential growth and did transform the world. Think about this. We have 5 platforms now involving 14 different technologies. So we think there's going to be a lot of capacity for innovation-oriented investors out there.
Cash is trash. In other words, it looks like a low risk thing to hold, but it's not, because when you have a zero interest rate, or in some cases in foreign countries, slightly negative interest rate, and you have an inflation rate of 2% or higher, you get taxed at a rate, essentially you lose buying power at a rate of about 2% a year, and that's a lot. You lose a lot of buying power. And so this is one of those environments you don't want to hold cash. If anything, maybe you borrow some cash and find something that has better than a zero interest rate in it, or something that has inflation. If you bought the average thing, which is inflating at 2% or more a year, you'd be better off. However, so then the other thing you need to do is diversify well. Okay, so don't have cash, and then you need diversification, and the diversification should be currency diversification, country diversification, as well as asset class diversification. Because on average, asset classes and things will be better than cash, and that spread is what you should diversify, because it reduces your risks and the uncertainties. And for God's sakes, don't own cash.
You know, when people say gold has intrinsic value, that's ridiculous. The idea that, assigning, we like gold colored jewelry or gold original jewelry, and that's intrinsic value, is ridiculous. And so I think for a lot of reasons, then we fast forward to this summer really, and you start to see the value of smart contracts and DeFi in particular and governance. And now you realize whether it's Bitcoin or Ethereum, even maybe some other choices, When somebody owns that, they become their own personal banker. And when somebody has that, and you can start creating other applications with smart contracts, and you get a lot of leverage, and that's really changed the game for me, and that's what got me excited.
There's so much asymmetric upside here. This is a thing that either goes to, at the time I said, roughly the value of gold. And at the time it was about $100 a coin, and so there's very little downside. There's all this asymmetric upside. I said, take 1% of your net worth and buy this schmuck insurance. This is a fantastic fundamental hedge and store of value against autocratic regimes and banking infrastructure that we know is corrosive to how the world needs to work properly. I think this thing is $100,000 a coin, probably in the next 3 to 4 years. And I think it is, in the next 20 years, $1 million a coin. So there you have it. You could buy the S&P 500 index, buy 99% of that. So if you have $100 to invest, what I'm saying is...
Put $1.
Put $1. And the reason that $1 is so valuable is that it is fundamentally not correlated to the other 99. And just on the off chance that all the people that manage the 99 may not totally know what they're doing, the $1 may actually save us all.
So if any of what you just heard has struck a chord, join me next week. The link is down below. And if you happen to be watching this during or after the challenge week, don't worry, because we're recording it all and making it all available to watch later. So you can still go to the link and catch up on what you missed. And actually, the recording is what makes it so fun, because it means we can come back in a year's time and just see how close we were to the predictions that we're going to be making. We're living in crazy times, and I'm really looking forward to sharing with you my plans during the challenge, and also hearing about your plans. Do leave below a comment if you're joining us on this challenge, and I'll see you on Monday.